officially welcome to this session of Conversations to Innovate, a series of webinars held by the Innovator Trust. We want to say welcome to a power-packed morning session that is brought to you by the Innovator Trust. They've hosted a series of these over the last couple of years, and this one is a really important one. We're talking access to finance. I'll be your host for the next 90 minutes. And we are cracking one of the biggest codes, I think, in the small business sector. I'm joined by two exciting guests who I'm about to introduce. But if you are here, chances are you felt the pinch, guys. You, as we've just seen, are entrepreneurs. You are the ones with the great ideas. You have a growing hustle. When it's time to raise funds, however, we know that there's always a problem. Suddenly the door seems to be locked. And today we're going to find out how we can possibly pick that lock, or let me say, use the right keys to unlock that door. To put things into perspective, guys, about 40% of African SMEs struggle to access funding. Almost 45% of adults in sub-Saharan Africa are financially excluded, and that's in 2025. And I think if you take a moment to think about those kind of statistics, it is very close to home. That means millions of brilliant ideas never scale, not because they're not good enough and not because the entrepreneur behind them is not passionate enough or driven enough or educated enough, but simply because they cannot access the fuel that they need to get their car and their engine going. And that fuel is access to capital this morning. Think of funding like oxygen for your business. You might have lungs and a heart and muscle, but without oxygen, you simply cannot grow. Today's session is a learning curve for how to breathe. How do we breathe? How do we take in that oxygen and actually make the best use of it? Before we jump in, there are some quick notes that I'd just like to mention to everyone, some house rules. Please use the Q&A box today throughout today's conversation, or the chat box as you've been using already. It's working wonderfully. We'll have a dedicated segment where we are going to address some of the questions coming through, where our guests are going to be answering some of your burning questions that you may have. We've also got some polls sprinkled throughout the session. I would please encourage you to engage with our polls, to answer those questions. A lot of your input helps us in terms of how we coordinate these kind of experiences and what it is we produce in the future and curate for you as ICT SMMEs. Then, of course, we'd also like to extend this conversation beyond this webinar, and that's on our socials. So if you aren't following us as yet on our socials, you can go to Instagram, Facebook, YouTube, as well as TikTok, and find us at Innovator Trust is the handle. And for today's session, if you are posting in your stories on any of those platforms, please do use the hashtag Conversations to Innovate, hashtag Access to Finance. Now, it gives me great pleasure to actually jump right in and start to introduce our guests. You don't solve problems like funding alone. You do it with people who've walked the journey. Joining us are two powerhouse voices who have walked the journey in their own way from various elements and various sort of sectors of industry. This terrain they know inside and out. First up, I'd like to introduce Mr. Tevin Jafta, who is the CEO of Startup Culture, a dynamic organization helping entrepreneurs build investor-ready businesses and scale sustainably. They offer a range of services to small businesses and particularly to some of the businesses that are a part of the Innovator Trust incubation program. So please can we put a round of applause together, a virtual round of applause for Mr. Tevin Jafta, who is joining us from Startup Culture this morning. Then secondly, last but certainly not least, joining him is Mr. Jaroshan Naidu. He is the executive head of digital enablement at Vodacom South Africa, leading innovation at the intersection of technology, fintech, and enterprise growth for Vodacom, the big technology brand in our country, no longer just a mobile network, but rather a technology enablement partner and brand in our country of South Africa. So I'd like to hand over to our guests now just to have a few introduction words. They can tell us a little bit about who they are. We love to know who's behind the screen. We also want to encourage that this session be as interactive as possible, guys. So please, 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 this is not a lecture session. This is not a session where you're going to just be hearing from a teacher-student perspective, but we really do want you to engage our speakers today while they are in the room. Use the opportunity, use the next 90 minutes to actually make the most of this session and get what you need for your journey as an entrepreneur. So I'm going to hand over to Tevin first to please say a little bit about your background, sir, and introduce yourself.
All right, thanks so much, Wade. And again, thank you so much for facilitating an authentic conversation. And again, thank you so much to the Innovator Trust for this opportunity for us to be with you guys today. My name is Steven, like Wade has introduced me already. I think he's covered bulk of the base of who we are and what we do. Also, shout out to all our entrepreneurs that I see is in the room today. Thank you so much for joining the conversation, because if you're not in the right room, will never know when you can get the right support. So thank you so much for joining us all the way from the Eastern Cape. I see our colleagues from the Northern Cape in the room. Thank you so much to all the entrepreneurs that are here. We honor you. We appreciate you. So for a startup culture, I think for us, it's always about how do we solve real problems? How do we help entrepreneurs to become better in what they do, to have ideas that we can scale both in local markets and global markets. And we are, I think, obsessed with four things. One, technology readiness, funding readiness, business readiness, and market readiness. I think those are the things that drives us as a team. We have to make sure that entrepreneurs, especially, is funding and investment ready. And I think today's conversation is driving that point across. For entrepreneurs that is here and has been in one of our programs, you would know that I become very pedantic in terms of you understanding that money is not your problem, and how do we really solve the problem of you accessing the right capital at the right time and at the right ticket size. So thank you so much, Wade. I think this conversation will share a lot of nuggets, some of our own experiences, and I hope we can help a lot of entrepreneurs to be able to scale. Thanks.
100%. Thank you so much, Steven. We are definitely aligned in that respect. We've got over 100 entrepreneurs on this webinar session already, and I know that number is only going to grow. So really looking forward to some of the insights and the expert advice that you and our next guest, Jaroshan Naidu, will bring for us. Jaroshan, over to you just to introduce yourself quickly and give us a little bit more about your background as well as your expertise on the Vodacom side.
Thank you so much, Wade, and good morning, everyone. Thank you, firstly, to the Innovator Trust for having me today. I know everyone was expecting Sanesh Bihari, but unfortunately, he couldn't make it. So I am happily standing in because I'd love to speak to SMEs and businesses with every chance that I get. So, as you did mention, I'm Jaroshan Naidu, but many people call me Jay. I am the executive head of department for digital enablement at Vodacom. So I think you mentioned quite a few interesting things, and one of the things I also want to mention is Vodacom is we've transitioned from a telco to a techco. So that means that we've basically taken the steps to ensure that we can actually help your business grow in every means necessary to actually be relevant in this technology and enabled era, or as they say, Industry 4.0. So with that being said, I think Vodacom is known for, its technology, but people also are not fully aware of the fact that we also do financial services as well. So we offer numerous things such as, loans, we offer, insurance, and we also offer different payment gateways to really help enable SMEs from that perspective, to give them an end-to-end journey so that they can help their business grow from different areas of, their business. I think further to this, just a little bit about myself. I've actually been working in the telco and techco space over the last 10 years. So I do have experience with, Vodacom, BCX, Telkom, and over the years, years, I've dealt with, corporate organizations, government organizations, but where my heart truly resides is with the SME, because the SMEs fuel our country. That is who drives our economy. And we want to make sure that we can actually enable SMEs to become the best versions of themselves, because if they are the best versions of themselves, then that shows that our country is growing towards the right, areas. And with that being said, it creates more employment opportunities. It creates a better, environment for all of us, and that's something that we want. I myself am very patriotic, and I love our country. From every single, city that is here, I think I've visited probably 95% of the country already. So I still need to cover 5%, which I'm looking really forward to doing, because then I get to really understand, the full landscape of our country. But with that being said, I think I'm quite excited to speak to you guys today around funding. And hopefully we can, unlock some of the myths and also some of the supposed secrets to really helping you guys get some, funding where you are expecting it. So thank you so much, Wade.
Awesome. Thank you so much, Roshan, for that introduction and for also just letting us have a foray, I guess, into Vodacom's offering. We are super excited to find out a little bit more about what those specific products, opportunities, platforms are that we can use from a digital perspective. Guys, if you haven't noticed, I have launched a poll to kick things off for us. And while the votes are rolling in, please, guys, do go and answer that poll. We are not yet at 100%, but I want to just find out from you, Tevin and Roshan, have any of you been entrepreneurs yourselves in your career path, in need of funding in this role before?
It's my daily journey. Yeah, so I have over 25 years experience in enterprise development. I've been an executive at the Small Enterprise Development Agency, now SETFA. I've been at the CSIR, I've been at the Department of Trade and Industry and Competition, and I've been at, and then I left government for my own sins, I think so. But I think I was pushed by my partner, my business partner, but also my wife, to say that, Tevin, you have given a lot of yourselves in developing entrepreneurs. It's now about time for you to go and really do all the things that you keep on explaining to entrepreneurs. You have to go and do it yourself. So about 4 or 5 years ago, I journeyed into starting my own business. We started off as a group of companies. And when you start a business where you think you know everything, you journey on this, you go on this journey, and you start the business, and you want to have this group company because you want to be fancy and famous and whatever. And I was brought back to earth when I went to look for funding for one of my businesses, or one of the businesses that was started by my mother, in poultry. And she started a business many years ago, I think 16 years ago, small scale, but she was trading. And the day I left my job, I went onto the farm. I sat on the farm and I said to myself, you know what? I see gold here. And I converted that business into a vertical integrated farm. And I went for my first fundraise, or I went to raise some money, because I carried the business. I bootstrapped the business for about a year, 2 years, with my partner. And we said, okay, fine, now it's time for us to go and look for money from a third party. And I went to my old friends, my colleagues in SETFA and in CFA. It was CFA then, and I was rejected. I didn't raise. I wasn't able to raise, but I learned so much from my first journey into raising capital into the market. And I can tell you now, since that no, I've never received a no again, because I learned from the mistakes that I made in raising capital for that one business. And subsequent to that, my second raise, I managed to raise a bit of capital into the business, and I scaled the business into what it is today. So the journey of entrepreneurship is not a journey. I always say to entrepreneurs this, it's not for sissies.
Sure.
Right? Entrepreneurship is not easy. If it was easy, all of us would have been entrepreneurs.
Yeah.
So you must understand, when you venture into that journey, that hustle, you must have grit and you must have determination to take no's, but to learn from those no's, to fail, fail fast, and to fail forward. And I think those are the things that I've learned over the last 5 years being and running my own businesses. And it's success, it's been tough. Every day is a long slog. But yeah, it's been rewarding.
Thank you so much for sharing that, Devin. I think one thing about entrepreneurship that many entrepreneurs don't understand, and particularly ICT entrepreneurs, is that it is exceptionally difficult once you actually get into the day-to-day operations of what's required, especially when it comes to funding. Now, we've had you guys respond to this poll, and it's I'm going to share the results here. About 43% who are saying yes, they have applied for funding before. 33% of our attendees today saying they have not applied for funding before, and then 24% saying not yet. So these are the group that I guess needs a little bit of some of the weaponry and armory that they need to be able to apply for funding and do it correctly. So I'm going to keep that in mind for later on, guys. There are going to be some more polls, but for now, we're going to get into the meat of today's conversation. But it's very interesting to actually see at what stage are the entrepreneurs who are in the room, so that we can attend to each of them directly. Let's get real. Too many SMEs, as you've said, Devin, go into funding like someone walking into a marathon with flip-flops, full of hope, but not really prepared for the journey ahead. What are the most common red flags funders see in SME applications? And I want to pose this to both yourself and Jeroshan, if you can also pop in from that side. Devin, we'll start with you.
Okay, so for me, the one big concern that I have around fundraise and going to an investor or funder, whether it's a bank or DFI or a venture capitalist, is the readiness of the entrepreneur. Simple things, things like a business bank account, things like compliance documents that are applicable in terms of you raising capital, right? So those are the basic documents that needs to be in place. The ability to have your structured data room where you are able to structure your investor stack, your fund readiness stack, and you are able to know that when a funder comes to you, you are able to pull data from your data room, and you are able to then submit it to a potential funder. Because remember, funding is time bound, right? I need to part with money for your business. So I need to understand your business. And the only way for me to understand your business is to have some documentation. And I think that is one of the big red flags that I believe we have in South Africa. Entrepreneurs are not, money is not the problem, but the problem that many are faced with is the readiness to be able to have the right documentation in place. They meet three requirements: solvency, liquidity, and bankability. Because for me to be able to get to solvency, liquidity, and bankability, I need to have certain records. I need to be able to see, do you have the assets that I can finance on top of it? Financiers love assets on which to borrow. And I think Jay can touch more on that from a Voderland perspective, maybe. Yeah. So, but I've seen most of the funders, they need something on which they can borrow, right? They need to see if the business is liquid, if there's money in the business on which they can borrow. Is it solvent? Will it be able to will I be able to recover my money later? And is it bankable? Is there a product or service that someone wants? And many a times, those are some of the red flags that we pick up very early when we prepare an entrepreneur for funding. But what we're trying to do is to de-risk the entrepreneurs through our programs, to be able to have those things in place, have a structured data room, have the documents in place, have a business bank account, trade from this business bank account, and not from your personal bank account. I know sometimes it's tempting. It's sometimes tempting to try and think that you can cheat SARS. I can tell you now you can't. You will get something later on if you don't deal with the issues up front. And I think those are some of the red flags that I normally try and fix at the beginning. I normally say to them, it's the ho-hos, it's those small things that I need to fix first before I bring you before an investor and a fund. And those are the documentation that many entrepreneurs are struggling with.
Awesome. Thank you. Thank you so much for that answer, for all that insight, guys. I am posting some nuggets from what I'm hearing into the chat section. I hope you guys are making notes or taking notes. I see a few of you asking whether this recording will be available. Yes, it will be available. As long as you are subscribed to the Innovator Trust YouTube channel, you will be able to access it probably in the next week. Chiroshan, I want to lend over to you and just hear what your sort of answer is in terms of the red flags that you guys perhaps see coming through on your end. You obviously are sitting with having created a now digital tool to enable this kind of interaction and access to finance, which is quite new for how people used to traditionally access finance. What are some of the red flags you guys are seeing coming through on your end?
So I think, firstly, I'd like to echo a lot of what Tevin said. I mean, he's hit the nail on the head. One of the major things that we actually find as one of the major red flags is poor financial documentation, and the fact that a lot of financial documentation is not available. So, with that being said, not having things like bank statements and income statements, as an example, is very common. So what happens there is it's very difficult for a possible funder to actually get behind businesses because there's no true track record of these businesses and what they were able to actually achieve. So how do you invest in something that you can't really actually back up? And that's so important. Other things that typically actually cause a little bit of a red flag are things like finding out director details and finding out more about directors, and also where entrepreneurs are not able to actually communicate their business model. You need to be able to actually clearly communicate what your business model is, what you're trying to achieve, what your goals are, what your milestones are, and what your mission really is. If you're unable to do that, then you're unable to actually get someone who's going to be willing to actually give your business money to help that business grow. I think further to this, a lot of businesses actually put together unrealistic projections. So this is typically because there is a bit of a lack of market validation. So you need to
Oh,
understand if your products and services and what you're offering is actually needed in the market. If it's
yeah,
not needed in the market, then how do you come up with these unrealistic projections? And
yeah,
sometimes investors know a lot more than what you actually expect them to know,
sure.
especially when it comes to them spending their money. So they may actually do the relevant research before they even speak to you. And
Yeah,
once they understand that there's no real need for this in the market, it kind of takes your business plan and it crumples it up. And that's something that you never want to do. So you want to make sure that you do the right market validation. You want to make sure that the projections you make for your revenues are actually realistic based on that market validation. Some of the other things that are very important that organizations and large organizations like to see are things such as governance structures. So when there's
sure.
weak governance structures in place, then that typically means that the money could be misspent. And some of the other two things that we'd see are incomplete applications. So where you leave blanks in the application, that's actually seen as a red flag because it shows that you may not necessarily have all of the relevant information required for us to, provide you with the relevant funding. I mean, the application form is there with that. We're asking for that information because it's really relevant. So it's really important to try to get that information. And then lastly, the one thing that really hinders funding is actually a lack of transparency, and now that there causes major concerns because you want to be as transparent as possible with an investor. It's one of the basic accounting principles that we, I think, get taught from an early age. I think we learn that in accounting and business studies in grade 7 and
Yeah.
grade 8. So it's something that you want to continuously do.
Awesome. Thank you so much, Roshan. Some wise nuggets coming out there. And guys, I'm posting these notes as fast as I can into the chat section so that you guys actually remember them because they're key things to do. I often say getting funding is like getting onto a plane, right? The ticket's important, but if you show up at the gate without your boarding pass or without your ID or without your passport, if you are going internationally, then you are not getting on that plane at all. You can forget about flying, before you fly, you've got to have certain things in place to do that. And funding is no different. As we've heard, guys, just to recap very quickly, some of the common red flags that is coming out from our guests and our experts who are sharing with us is things like incomplete applications, having your compliance documents together. And I think, Tevin, what you gave was such a practical insight around how do you do that? How do you always ensure that you are always ready for a funding application? Because most of them, from a compliance perspective, are going to ask you for very similar things. Most funders or investors or funding outlets need to see a standard set of things. And if you always have what you call a document room or a data engine, so to speak, then you know that you are always ready, And I think more and more there are digital tools out there that are assisting SMEs with compliance. I know even within Vodacom's ecosystem that some of the tools there are ensuring that just from a simple document perspective, you're able to hold and maintain your compliance records in one space. So that one, a really key one to think about, guys. Then of course you would say that it's obvious, but it is still one of the areas that SMEs get wrong the most, is having a clear business model and that articulated clearly. Do you understand the value that your product or service is bringing? Do you understand the market that is benefiting from that? And do you understand the monetization of that product and service? I think that's really what funders are wanting to understand from what I'm hearing coming from our guests. And of course, transparency, guys. I think this is one that you use not just in this funding round, but I think throughout your life. Transparency always sets you ahead because you've got absolutely nothing to hide. And when you've got nothing to hide, you've got everything to learn. And I think that is the biggest thing that you can take away, because as a SME looking for funding, you want to be able to learn from those and grow. That's why you are also entering into this funding engagement, not just for money, guys. It's not just for cash. It's what are you going to do with that cash? And when you're seeking out funding, whoever you're looking to for funding, are they the right people to ensure that you grow when you do, in fact, successfully receive that funding? I'm going to go to another one of our polls now as we kick off into one of our other questions and theme areas. So if you guys can please answer and engage with this poll. As an SME who may have applied for funding multiple times, are you guys at all aware of what was wrong in your application when you were rejected? What kind of feedback, if any, did you receive? Please let us know. This is very helpful information, and it will definitely lead us into our next. The lack of feedback is something we hear all the time, Jaroshan. How do we close that gap? What do funders wish SMMEs knew before they applied while we wait for everybody to answer this question?
So I think one of the things that a lot of funders wish that SMMEs knew is the fact that they do require some form of historical data on your business. So
Sure.
they do want to understand, I think Tevin mentioned it earlier as well. You have a business bank account working. It's not
Sure.
just your personal bank account details that you're actually putting forward. You need to have that separated, because at the end of the day, your business is its own legal entity and it's its own basically person. So it's identified as a legal entity and its own individual. So it's very important to actually have that put together so that funders are aware that you have some record, you've been actually working at something. Some months may not be as good as other months, but it's not something
Yeah.
to hide. It's actually something to share, to show that I possibly need this funding so that it'll allow me to actually increase my sales, because you may need that funding for marketing. You may need that funding to invest in better equipment or hardware if you're doing something of that nature. And that's where I think it's important to show that level of transparency and have that level of record. So it's so important to actually start documenting everything that you do as soon as possible if you're not doing it already, because everything that you document is basically you keeping record of your business. And in today's day and age, the more data you have, it's actually going to help you a lot more, because you'll be able to start using things eventually like artificial intelligence,
Yeah.
big data, and also machine learning. And I mean, these are three things that you see a lot going around a lot nowadays, and it's spoken about a lot. But if you have to actually look at it, you can't do it without information. Everything needs
Awesome.
some form of data
Yeah.
so that you can
Yeah.
continuously learn. So I think that's very important, just to know that you need to keep track of everything that you're doing. And when you are asked for that record, you need to be able to provide it. So the two main things is the transparency again, and also having a record of
Historical.
everything that's happened. Correct.
And I want to bring you here in. So Jeroshan really is speaking about historical data, but what kind of historical data are we looking for? Are we looking for 6 months? Are we looking for 3 months? If I just registered my business bank account just last week, is that sufficient? Or are we actually looking at a much longer term in terms of the requirements when we are applying for funding? If you can give us some
Yeah.
insight around that, please.
Yeah. Remember, there's a difference between funding and investment, right? So there's two different
100%.
segments. So the one might need a little bit more data, like what Jay
Yeah.
was saying. The other one might need a little bit less data. But the golden rule normally is between 3 and 6 months of bank statements, right? Because I need to see, like again, like what Jay has said, I need to see some historic data that I can build a business case and a funding case on. So I want to see some funding coming through your business bank account. So normally, safe between 3 and 6 months of
Okay.
bank statements that is kept. Um, I normally say it's, and again, it's what Jay said, and you said at the beginning, it's about a living, breathing organism, right? There is a business. A business breeds. It's a living. It's a legal person. It's an individual. So it has certain things. It has a heart. It has arteries, and the one that drives the other. Your customer being your heart, your arteries being your revenue. So revenue needs to come in for the heart, and you need to have a customer that is willing to pay for your service or for your product or service, and that needs to be captured somewhere. And for me to for the way for me to see if there's a customer behind the business that is paying for the product or service is by seeing some of it in your financials, right? So normally 3 to 6 months you save for funding, raising funding from a
Awesome.
financier.
Awesome.
Sometimes, depending on the age of the business, they might also require audited financial statements so that we are able to see third-party validated the data that sits in the financials. Yeah.
And I think that's a nice segue into the next section that we're going in, which is understanding the various types of funding that one can apply for as a small business. But thank you, Devin, for sharing just the insight around the historical data required. Guys, if you didn't get that, and I'm going to reiterate throughout the session, I hope you are taking notes. It's 3 to 6 months of some sort of financial record taking within your business account. That is, I guess, the bare minimum. But as Tevin did mention, there is much more extensive analysis or historical data that may be required depending on the various other types of funding that you may be applying for now. Just looking at some of the results from our polls, a whopping 70% coming in to say they did not really or were never ever given any feedback from funding applications. A whopping 70%. Only 21% coming in to say, yes, I did receive feedback. And then 10% of those saying, yes, I received feedback, but it was confusing and not very helpful. So we definitely have a feedback loop issue that is occurring. Because how am I to know what to fix if I don't know what was wrong, right? And if you are one of the 130 participants in the room now, I think you are in the best room this morning, because you're going to get some of the untold and secret sort of codes that you need to unlock your next journey of funding and business growth. So please do keep engaging. Thank you guys for the interaction thus far. It is great. And even from our guests, the feedback coming through is quite insightful. I'm going to just share a little bit now around the information on what it is, other alternative finance options that do exist, other ways or types of funding that SMEs can go for. Not everybody needs to go to a bank. I think we can all agree that that is the case. And understanding what platforms, what organizations, what entities exist out there is sometimes the key that's missing in terms of needing entrepreneurs to actually access the right kind of funding and access the right kind of support that they need. And obviously the readiness for each of those environments are quite unique as well. So I'm just going to share a little bit, guys, with you on some of the types of fundings and definitions. The first one that we have here is looking at development funding, and I'd like our guests to jump in here to share a little bit about your understanding and your experience of development funding and the type of SME that this kind of funding is targeted at. Tevin, Jeroshan, please, guys, feel free to jump in here.
All right, maybe let me quickly start. I think development finance, the word speaks for itself. So it's that early stage entrepreneur that needs that risk capital. And I think on the chat, there was someone that spoke about there's not enough instruments that supports high growth, innovative businesses. And he's correct, right? So South Africa has a lack of risk capital instruments in our ecosystem at the moment, right? And we're trying to fix it. I'm also a presidential commissioner for IR. As part of the commission, especially for tech high growth entrepreneurs, that is one of the things that we were focusing on to try and solve for the availability of risk capital instruments. If you go to other jurisdictions, normally those instruments are there. In South Africa, you don't have enough of it. Most of it sits within the Technology Innovation Agency, and it speaks about that developmental agency. So it's a mixture of incentive finance, grant finance, and pre-seed finance. Let me say pre-seed finance, seed finance, grant finance. They play in that developmental type of fund. There's not
Essentially,
enough.
we're speaking about early stage growth
Early
SME.
stage, yes. Early stage, not too much. So it's taking a lot of risk. You won't find them in the banks. You will find them more in development finance institutions that has developmental instruments. Yeah.
Awesome. Thank
Maybe
you
I
so
can
much.
just add to that. Sorry.
Yeah.
On the development finance, some examples, that you can actually look at for development finances are typically, government run. So you'll have, organizations like SEFA, which is Small Enterprise Financial Agency. You'll have SEDA, which is Small Enterprise Development Agency. You'll also have DTIC, which is Department of Trade, Industry, and I think Competition. And the last one would be NIDA, which is the National Youth Development Agency. So these are just some of the areas or places where you can actually look at getting some form of development funding as a South
Awesome. Thank
African.
you, Roshan. I think that's super helpful, guys. If you didn't catch that, that was the NYDA mentioned there, which is the National Youth Development Agency, where the DTIC also mentioned there, another government entity, and then, of course, SEDFA, SEDA and SEDFA, who are now operating as one organization under SEDFA. So if you guys are in that space, in that early stage space, as Tevin was explaining, and you are looking for that sort of kind of funding to access, those are the kind of organizations you want to be applying to. I want to move on to the next one, Tevin and Jeroshan. If we can just speak a little bit more about, something quite new. It's been popping up quite a lot. I think it's been around for a very long time, just not as visible or as advertised, let me say, to the SME market, but it's purchase order or PO funding or something for invoice discounting, which the flip side to the same coin. But if you can just share a little bit more about purchase order funding, invoice discounting, and which kind of SMEs those would really be applicable for.
All right, so this one is an interesting one. This is also one that I've just recently raised on. So where you raise on the back of a purchase order, it's as simple as that, right? So you must have a purchase order from a client that is willing to buy your service or product. They provide you with a purchase order as an agreement. They also provide you with normally not a letter of intent, but a purchase order that can be monetized, or an invoice that has been issued to a potential customer that can be monetized. So what the purchase order financier does, they provide you with that funding upfront. They give you that money upfront to be able to service the order. And once the order has been serviced, normally what happens here is that a joint bank account is opened between yourself and the financier, right? So when that money is paid by what we call the customer, because the financier validates the customer. They don't validate, they look at you, but to a large extent, they validate the customer. Because remember, the person who's going to pay that invoice or pay that purchase order or service the purchase order is the customer. So they validate the customer, they look at the customer's history, and on the back of that, they provide you with the finance. What entrepreneurs must be aware, they charge a fee. They can charge up to 21% fees, right? So you need to be able to play with a lot of these purchase order
Yes.
financiers to be able to get the right one that is not as expensive, but is able to
Yeah.
give you the money upfront for you to be able to service your purchase order.
And I think, yeah, we really are talking to an SME who has a lot of work already.
Yes.
They are currently in the process of a contract, delivering on a contract, a long-term contract, a medium-term contract, or perhaps it may just be a once-off purchase order as well. But they are very much comfortable with delivering on working orders. They
Yeah.
have that track record. All of those initial early stage stuff would have been sorted out at this point of your business growth journey. And you are now essentially seeking to fulfill what would be your cash flow for the period so that you
Yeah.
are able to deliver on this order, because you would only be paid essentially from your customer once this order has been delivered. So it is a much more short-term financing option, but a financing option nonetheless. And
Yeah.
I think what was great that you raised is that SMEs acknowledge the fees that are attached to particularly the short-term financing
Yeah.
option. Because I think the fact that it is short-term and it's almost a quick win, makes you get very happy. But you have to understand that there's a cost for that quick win. There's a cost to turn over that cash quite quickly. So that is something to think about. Roshan, any thoughts from your side on PO funding or invoice discounting?
Yeah, definitely. So it's actually something I actually had a situation on, I think it was last week Friday, where there was a SME that actually came through to Vodacom, and they needed some PO funding. So they actually provided us with a PO from the company that arranged that for them, and we were able to actually give them funding for, I think it was 4.8 million rand, so that they were able to then deliver on the service, and then in return, we'll eventually get that payment. But it was something that was seen as, one of our short-term loans, and by offering or showing a funder the fact that you actually have the business there, you're so much more likely to get that funding, because now they actually know that there's a return for them as well.
That is a great example. I think, guys, if you didn't know about purchase order funding and invoice discounting, for those of you who have been in business for quite a while, running your operation for a couple of years now, and you do have working orders, but you're just perhaps finding yourself a little bit cash strapped every now and then to be able to deliver on some of those orders. Now you know that this option, this alternative finance option, is available, and that Vodacom actually is one of the entities who is now playing in that space as well and offering support in that area. I want to go on to the next one, gentlemen, grant funding. Now, I think this is the one we all like to have access to. If we could all be beneficiaries of grant funds, I think we wouldn't be in a session like this, but it's not as readily available. Where do we find it? Where do we start to even knock on doors in terms of understanding where we can access grant funding, and maybe just give us some insights about how readily available from a South African perspective grant funding actually is?
Yeah, I think again, Wade, you've touched on this one thing. This one is important, but I normally say to entrepreneurs, be careful. Don't get your hopes up. Remember, a grant is what it says. It's a grant. You're not paying it back, meaning that there's many people that's going to apply for this type of financing, right? So normally government is your biggest grant funder. You do see some corporates providing a mixture now of grants in terms of their funding models, blended financing instruments, which has a portion of grant, which is non-repayable. But because it's non-repayable, a lot of people apply for it, right? So your chances of being successful is dependent on the quality of your application, dependent on the quality of your submission. Is it readily available in South Africa? Yes, it is. I think it's for me, and personally, please don't take it that I have an issue with. I've always, since I've been in government as well and developing grant instruments, I always haven't had an issue with it because it makes the entrepreneur too dependent on the grant. An entrepreneur who doesn't understand what the purposes of grant financing will never graduate out of grant financing. They will always want to build the business on grants, and you can't. All right. That's the one thing. And that is what has become in South Africa. We are too grant dependent. Right. The second thing that is a problem in South Africa around grants, and where I move more to incentives. In the wording, in the nomenclature, because incentive says what it is. I provide you with an incentive to do 1, 2, 3, 4, 5 for me. And there's where you see DTIC have moved away from the grant into the incentivization, where it incentivizes the business by providing you access to maybe working capital or access to machine and equipment, technology transfer, specific to your need. And they provide you with an incentive blended at 50-50, 80-20 to such an extent. So 20% of that amount of money is a grant portion, 80% is a loan portion. For me, that is a better option for us to go.
Sure. So Roshan, any insights from your side around grant funding?
So I think, again, I echo a lot of what Tevin is saying. One of the things that I also just want to mention, though, is a lot of corporate organizations, especially that are in the industrial space, the manufacturing space, and also the mining space, typically also provide certain levels of grant funding as well, due to the fact that sometimes their business has harsh effects on the environment and so forth.
Yeah.
So what happens is they actually do certain types of funding as part of their CSR to ensure that the people around the areas are actually well taken care of. So if you have a business that's actually looking to improve, maybe the level of pollution or maybe the level of recycling or something of that nature, sometimes it's also good to look at these large organizations because they also do have grant funding available. And it's not always just government related. It can also be, with corporate organizations too.
Yeah. So I think, guys, the lesson there, do your homework. If you are in a position where you are looking for grant funding, please tread lightly and carefully. Understand the responsibility that comes with grant funding, and understand that you cannot grow a sustainably profitable business off a series of grant funds. At some point, that grant funding will run out. And if you don't have your systems in place, your business model operating in such a way that it is actually monetizing for you, you will find yourself in a very difficult space. So tread lightly with the grant funding option. We're moving on now to debt finance. I think this is probably one of the most known or advertised to businesses, Jeroshan and Tevin. Debt finance really being loans and credit facilities. And we often get ourselves into very hot water as businesses when we do go for this option. Give us a little bit of that wisdom and knowledge and understanding so that if debt finance is the last option we need to take hold of, how do we make sure that we handle debt for a business in such a way that it helps us instead of hurting us?
I'm going to ask Jay to start because, yeah. I'll tell you why.
Definitely. I'm happy to start this one. So I think, again, this is where your business plans become so important. You need to be able to actually understand when you are taking this debt finance, is it something I can pay back? Is it something realistic? You don't want to be in a situation where you're taking finance just to cover debt and there's no real plan in order for you to actually work it back and be able to pay it back. So you need to have a solid plan, you need to have a strategy in place, and you need to actually probably run that strategy, not just through the people in your business, but maybe one or two keen listeners of people who are close to you that understand business as well. So it could be a mentor, it could be, a possible angel investor, or just someone that you may look up to from a business perspective, and you can actually get some advice from, because it's also important to have these circles around you to actually understand and get a better understanding of how to do business on a day-to-day basis, because I think business is an ever learning experience. It's not something that you just pick up and everything from the get-go. It's something you learn as you go along, and some people can also teach you from their mistakes. So having that plan that can actually be implementable and not just something that can be sitting on paper is important. So let it be practical and ensure that you can actually, meet the deadlines and the payments that are required. And sometimes it's always good to underpromise and overdeliver. Always remember that, especially when it comes to debt financing. Okay, David, I'm not sure if you want to add anything else, sir.
Yeah, no, I think you've nailed it. For me, it's here where the three tiers comes in: solvency, liquidity, and bankability. And if the business is not solvent, if the net asset value of the business is not good, it's going to be very difficult for you to raise debt. And you must be very careful that the business carries too much debt, that you are unable to pay yourself and pay your team and pay your creditors. And at the end, you go into one form of liquidation. So it's very important when you go for debt finance to understand your business model, to understand that you have monetized your product, you've monetized your service offering, there's money coming into your business. You solve a problem where you can bring in money every day, every week, every month. There's liquidity in the business, there's money coming in, because the financier sitting on the other side needs to be paid back, sometimes weekly, sometimes monthly. And if you are unable, and there's also where they attach or where they have to have some surety of the business. So normally it's they like assets, so they will attach an asset, they will make sure that there's liquidity, that they can claim their money back. So you must make sure that your business model is able to bring in money every day. And for businesses on this platform that has worked with me, that is our mantra. You must have a business that brings in money every day of your life, every week or every month, not every year, because you can't bring money in once a year and expect for you to have a debt facility that you have to service every week, every month, every week or every month. So yeah, that is just my input into debt finance.
Some hard hitting but very important notes there from our guests, guys. As I said, I hope you are taking notes because these are some things that you can start doing now, regardless of where you are as an SMME. If you are an early stage startup SMME, then this is how you start correctly from the get-go. And I think once you start right, you end up having less challenges along your road because you've got your ducks in a row from an early stage already. And if you are one of those SMEs who perhaps has made these kind of mistakes, there are ways, guys, that you are able to correct it. There are habits that you can now start to inculcate. Remember, you are responsible for the information that you receive, for the knowledge that you have. And if you are applying it, it will show results. I want to move on now to equity funding, guys. We're almost done with understanding the different types of funding. Equity funding is quite a big one. Also specific one, but please give us some more insights, Devin, to you on the equity funding area.
Yeah, I think yes, where you now ready to give some of your own business to someone else. And what I've learned is a lot of entrepreneurs, they are so attached to their businesses. They feel that me giving some of this business away to someone else, no, it's a no-no. So here it's about thinking carefully around who your equity partner is. You must have done a valuation on the business so that you know what percentage of your business do you want to sell to a potential partner. It's not it's not bad to have an equity partner that can come in with maybe a different skill than you. You know, they can give you some other things that you might have except only finance. I like equity partners that comes with more than just money. They come with some experience. I think Jay spoke about governance. You know, I like an equity partner that can take a seat on my board, on my structure. Normally, entrepreneurs are small. You don't want you maybe a mentor that is so I believe in this thing. You give, you take the risk as much as I take the risk. And that is what an equity partner is. They take some of the risk that you would take on your own. So don't see equity, giving equity away as bad, but see equity as a potential bringing in a partner that can grow the business grow the business into areas, territories, markets that on your own you will never be able to access. Um, and starting sometimes with some of your shareholding is also not a bad thing, but it can, as long as the partner comes in, like I said, with more than just money, but with some experience. They can help shape your governance. They can come in and say to you no sometimes, where and they a separate set of eyes into your business. I'm not saying give a lot of equity away early, but sometimes it's good to bring someone else in as an equity partner. So it's basically for me, equity financing is parting with some of your ownership in with someone else that can come in and liquidate bring in some liquidity into the business. Yeah.
Thank you, Devin.
I think,
Roshan, any words from you on equity?
yeah, I think I'm also, I believe this is a great option, but you have to approach it with a lot of caution. And the reason that I say this is I actually encountered a really sad situation just last week where I actually bumped into some hairdressers. So there's a hairdressing salon that I go to here in Gauteng. And when I go to cut my hair, I have discussions with these guys, and they told me one of the saddest stories. So what they did is they actually got equity funding, but they went with somebody who didn't understand their business model and didn't share the same vision as them. And now with that, it caused a lot of issues. And what happened is, the funder wanted to go in one direction, and the business owner who actually started this idea and concept of this barbershop wanted to go in another direction. So what happened is, the business owner really needed the funding, and unfortunately now the funder's given him the money. He told him that he bought into the idea, but he didn't understand the idea. He didn't understand, I think, the art of hairdressing in this case here. So it's so important that you actually get people that understand what you're trying to achieve, what your business is about. And remember, those are the principles. Your core values and your core principles are things you can't move away from, especially if you want your business to succeed. So ensure that you can actually align with these people and allow them to actually understand what you're trying to achieve. And once that's done, then I'm sure that you've chosen the right person. But if not, you could land up in a situation similar to, this barber who's actually had to now sell all his shares over to this funder, and they unfortunately aren't looking like they're going to stay in the business for much longer.
That is such an unfortunate story to hear, particularly in the economic climate that we are in, Roshan, to hear that these are the kinds of realities SMMEs are facing. Whenever I think of equity funding, guys, I really do think about it as a marriage. This is a long-term option that you are engaging in when you give a part of ownership away in terms of shares in your business. You're not just looking at doing this for 3 months or 6 months. This is a very much a long-term journey, usually beyond 2, 3, 4, 5, up to 10 years sometimes. And I think it becomes so important to actually have that implementable strategy, what Roshan was speaking about. It cannot just be a plan that looks good and sounds good, but it must be able to be implemented. Your business plan is only as good as it is ready to be executed on. And it actually has to produce those results, because somebody is going to be waiting, like your wife waits at home, your partner's waiting at home for you to come home with the bacon. Your investors are waiting for you to report on their returns. They're waiting to know when their dividends are being paid. being paid out, and sometimes more aggressively so than others. So you've got to really be careful from the relationship aspect in terms of what kind of equity partner you are looking to engage in. Then, of course, guys, it brings us to our last type of investment model. And I think there may be variations within this one of course, as well. Before we take some questions, speak to us a little bit about blended funding models, guys. How is it relevant to the South African market? Are we seeing more of this in Western countries where an actual blended funding model is happening? We also know that they may be called hybrid models. There may be other alternative finance options that falls into this blended funding category. And then we'll go to some questions from our guests in the chats.
Yeah, I think we're seeing more of it in South Africa. I know SETFA, a lot of the instruments are structured as blended financing instruments because you need to understand the life cycle of the business and also understand if your investment team, your investment officer does the DD, they will normally look at options, both grant, loan, debt, and even sometimes equity blended into one funding facility to the entrepreneur. So you see more of it in South Africa, not just in government or government entities like SETFA. You're also seeing SETFA, NEF, and maybe the IDC. You're also seeing a lot of it now also in corporate. Maybe Jay can also speak about Voderland side, but I know you're also now seeing a lot of corporates playing in the blended financing side. But it's something that is becoming a common. Because for me, it depends on the investor. It depends on the financier.
Yes.
When they look at the entrepreneur, they must be able to look at the entrepreneur and say, okay, fine, they need a little bit of grant, they need a little bit of debt, they need to blend maybe the debt side or the grant debt side 80-20. So you find that structuring when they do the due diligence in the business.
Roshan?
Yeah, I think from a Vodacom perspective, and I'm going to touch on something called our business cash advance. So that's typically where businesses have a point of sale. So you have a point of sale, and you make use of that point of sale for probably, let's say, between 3 to 6 month period of time. What happens is we then look at the transactions you've made, and we understand how your business is actually transacting. And from there, we then able to give you, a cash advance of up to 1.5 million rand, which is something that can help you with, your day-to-day operations, buying stock, and so forth. And I think further to this, one of the other things that we have encountered over the last year, which was quite interesting to me, is the fact that there are a lot of investors coming into some SMEs who are giving, some form of capital in terms of monetary value. And what happens is that actually increases the book of your company. So your bank account's going up. And when you are going to get that additional funding, it shows that your business is in a healthy situation. Again, it's important to disclose that the people have actually invested in your business, but if anything, that gives a business investor or a funder a lot of confidence, because if someone else can buy into your idea, then surely they can too. And that's something that can positively influence your business as well.
Thank you so much for that, Roshan. I actually was not aware of that option that's available. So even me, I am learning as we go along today. Guys, if you haven't, please do take a screenshot of these definitions. I think they are a great sort of resource that you can just refer to, depending on wherever you are in your business journey, in your stage of growth. You can obviously look at these options and now understand where you could go to and what each of these sort of funding options or financing options are, and what the pros for each of them are, and what also some of the cons are. I know the Innovator Trust will also be sharing some resources with you guys post this webinar for you to use in your operations moving forward. I want to go to some of the chats now, guys, to just engage with our audience. We've been speaking about many things and brought up many topics. From Johann Strauss, we're hearing funding for high growth innovative businesses are limited and the waiting period very long. Government and the business sector are too risk averse. Is risk aversion a cause or a symptom? I think this is particularly key for ICT entrepreneurs. Jeroen Tavern, any thoughts on this one? Looking at tech entrepreneurs specifically, innovation sometimes seems a bit too risky to engage in. How are we handling this sort of situation?
Like I said, sorry, Jeroen, you can go. You can go, Jay.
No, you go first. You go first.
Okay, cool. All right. So, like I said, I referenced that one because I think it when I saw it, it piqued my mind. So, yes, the entrepreneur is spot on. I think South Africa doesn't have a very strong risk um, capital instrument ecosystem in South Africa, right? So we have a SAFCA where all your venture capital sits. You don't have a lot of pre-seed seed instruments that can support high growth tech startups. But what we're starting to see, Wade, we're seeing that whole process being unbundled, for lack of a better word, right? So I agree with the entrepreneur as well. South Africa is very risk averse, right? We don't like to take risk. Where many a times, if you look at government, I've been in many rooms where government we've been always told as support organizations and entities and instruments, why don't we take more risk than banks?
Sure.
Because remember, we need to take first loss. We need to be the ones who provide these instruments into the ecosystem. And we have not been doing it. But we're seeing the change. And like I said, we did a white paper to the president around establishing what we call a risk capital fund, as well as a sovereign wealth fund. You heard about the creation of the sovereign wealth fund. And I am also aware that there is work underfoot to create the risk capital fund. But to the entrepreneurs, the tech entrepreneurs, my view, where you need to start, the Technology Innovation Agency has a lot of financial instruments at pre-seed right through match funding, right? They are not in the room today, and maybe Wade, we can have a session with them so that they can explain
100%.
that instrument. And it's specifically geared towards innovative tech startups to manage your journey, from early investment right to a match funding up to 25, 60 million, 25, 25, 20 million, 25 million, which is sometimes a blended instrument, but it's also linked to industry matching. So there's a lot of money that is now available there. They've recently also created the 300 million rand fund in partnership with the SA SMME fund, as well as E-Square, to be also to be able to support high growth entrepreneurs. So you're starting to see more of these risk instruments coming into our ecosystem.
Thank you so much, Stephen. I think that was very, very valuable, and also just leading to somebody that we could engage even for future, guys. We are wanting to host a series of these webinars in future. So definitely keep a lookout in terms of who we are engaging and what sort of topics we are covering. But thank you so much for that, Tavern. Over to you, Jeroen.
So I think one of the things I can mention, and one of the things Vodacom is trying to really reverse is the amount of risk a business needs to take before they invest in some form of technology. Now, you may be wondering how and why. Now, what we've been doing is we host our own webinar series called the Fast Forward series, which is done on a monthly basis. And please, if you guys do see the link on our Vodacom pages, please register for it. It's really great. But what it's about is it's basically an educational campaign where we educate you about specific topics that actually are relevant to your business. Like, for example, the month of October is Cybersecurity Awareness Month. So what we're going to be doing is we basically educate you on some cybersecurity issues that are faced in South Africa, and we actually give you a free license to try for a period of between 1 to 3 months. So you try that license and you actually experience it firsthand. And once you experience it and understand how it helps your business, that's when you typically want to either adopt it, or if it's not for you, you can leave it. There's no strings attached. So it's something that we call try and buy, where we basically want to give you that experience and help you understand how that works. And that's something that we do through the Fast Forward series. Now, further to this, we also have something called the VHub. VHub is basically an educational platform that's free to all South African users in the country. Any business that is a South African business can actually access this. And basically, what it allows you to do is it allows you to understand the different types of technology and when your business needs to actually adopt it. So you can create a roadmap through this platform for free to basically understand when you need to adopt certain types of technology and how that technology can actually bring about innovation into your business, because you want to bring about innovation. Remember, innovation is not always something that's a new idea. Sometimes it's
Yeah.
something that already exists, and you just need to implement it into your business to get better efficiencies, to drive down cost of sale, to get more customers. There's numerous things that innovation can
Yeah.
do. And, myself, I am the innovation champion within Vodacom Business. So I'm actually the person that heads up innovation for Vodacom Business at this stage. So I see a lot of great ideas, and I want to ensure that we can help these businesses understand their true value. So, where we truly try to help businesses is where we provide you with the technology for free before you even start paying for it. You get to use it and understand how it helps your business, and from there, you're then able to overcome, that stigma of being of spending money for something that may not necessarily work.
I'd like to lead then into asking another question, Jeroshan, to you. What role do you believe technology plays in providing access to funding, which I think is this bigger macro issue which we are addressing today, very practically, but also access to funding readiness? And when I speak about funding readiness, I speak about all the other things we've mentioned in the first few minutes of our conversation that an SME needs to have in place in order to be eligible for the types of funding that we just mentioned now. Technology and innovation, as you've rightfully mentioned, we've had an overwhelming amount of innovation and pivoting in the technological space over the last 2 decades, perhaps. What role do you believe tech plays in this space?
So I believe technology plays a major role in enabling businesses to actually get funding. And the answer for me, the answer that I've given you is for a specific reason. Technology allows you to keep records a lot more efficiently. You actually can keep records, you can implement processes a lot easier, you can ensure that there's clear communication within your organization to ensure that, that goal and the business vision and mission is something that's easily communicated. And I think further to this, it also gives you something that is not just like a certified document. You actually have proof that all of the stuff is being done. You have digital record, and digital records are so powerful. I mean, you see digital records typically affect people in a negative manner in some cases when they post silly things on their social media accounts that can offend millions of people. But think of it in the positive instance, where you have a digital record that really helps funders understand what your business is about, what you've actually done, the amount of work you've put in, the amount of hours you've put in something. And this is where technology can truly help you. And I think further to this, it also then starts allowing you to do some form of innovation where you can see where certain processes are not working, where you can see, maybe your cost of sale is higher than it needs to be. Or let's say you run a tracking business and you find out that the routes you're taking are not the best routes. So you can actually minimize your costs. These are things that make funders feel a lot more comfortable with, because it shows them that you're continuously improving the business and you have a digital record to actually prove that. So technology must be used hand in hand with actually trying to get funding, but also it needs to be used to ensure that you can grow your business to the area that it needs to actually be in eventually.
Roshan, some of the tools that you know about very quickly that SMEs could possibly use to enable some of the benefits that you're speaking on. And Tevin, then over to you as well.
100%. So, I mean, some of the tools that we see being used quite a bit is things like, I'm going to mention things that from a low cost perspective to even a medium cost perspective that people are more aware of. But something
Yes,
like Huawei One Cloud, it's something that's not spoken about much and people don't necessarily know about it because Microsoft owns that market. So it's a productivity tool, basically. It allows you to gain access to things like your PowerPoints, your Excels, and so forth, but it also serves as an ERP system. So
sure.
ERP systems are extremely important as well. So this is a cost-effective one, and I mean, I think for a single user, the costs vary from something like 103 rand right up to about I think 210 rand. Now
Wow.
that's extremely affordable for someone who wants to actually keep some form of track of record on their business. You also need to ensure that you have things like your I'll use Microsoft OneDrive. Microsoft OneDrive is something that's extremely important to have. You also need your Microsoft Offices, but in case if you can't afford it, you then have an alternative with Huawei One Cloud, and then some of the other things that businesses use are things like SAP One Business, which is actually an SME type of solution. And you then also have certain dashboards that can be built for you on certain platforms like AWS. We have Huawei Cloud. You also have Microsoft Azure. Now, with all of these access to technologies, it allows you to actually gain further access to software as a service, which then allows you to really, you know, get your business to that next level because you're now truly introducing technology in. So these are just a few of the things. But guys, again, if you have the chance, join the Fast Forward series as well, and we can educate you on that too.
Awesome, guys. I'm very mindful of time, so I'm going to hand over to Tevin quickly to share any digital tools he knows about. And then I want to run through some of the questions and allow the last 10 minutes of our time together to answer some of your questions and comments.
I think I'm covered with what Jay has said. Only thing is your Sage and your normal that can manage your financials and so forth. It's very important, for entrepreneurs to have. Whether you
Yeah.
use Sage, or whether you use whatever financial invoicing platform do you use. Use it. Stop using these where you create your own invoice on on Word, and then doing the Sage thing or doing the Zero thing or whatever, it just gives you a more professional look and feel.
Thanks, Stephen. I think a great nugget there. And also, guys, with the digital tools that are available today, a lot of it is automated. Everybody has started to include not just AI, but generative AI and intuitive AI that is thinking on our behalf. All of those things that might have taken weeks to analyze from a data perspective is now readily available to you with some of these tools. So just to reiterate there, it is Huawei One Cloud. We've obviously got the Microsoft Cloud package as well, the AWS Cloud, as well as SAP One, which Jeroshan mentioned over there. I'm going to go to some of the comments now. GT Fanel sharing with us, the fear of rejection and going through the worst with no direction for me today is paving the way forward. Sometimes people act like a high secret gathering, not welcome for everyone, sometimes knowing it's one-sided. I think that is something that every entrepreneur at some point has felt. So thank you for sharing that with us, Mr. Nel. From Tlale Mateke, thank you for being inclusive and including captions in this webinar. Are there particular types of data points that our speakers recommend SMEs keep records of that could position them well for the alternative credit scoring models that are emerging in South Africa? I think that's a very great question to our guests. I'm going to keep this over to you, Tevin. Particular types of data points that our speakers would recommend SMEs should keep. What are the top three, if there were top three for you? Sorry, Tevin, you're on mute.
Sorry. We're seeing a lot of new instruments coming in to look at the credit worthiness of entrepreneurs. So it's basically your financials, making sure your financials is kept up to date. You keep your bank statements readily available. You make sure that you have access to your clients that are able to buy your services, products and services. you have those records available so that people can be able to see that, like Jay said earlier, people see that other people are investing in your business. So
Sure.
there's a possibility in this
Want
business.
in as well.
It all stacks towards your credit worthiness and your fundability for any investor. Again, your data room becomes very important.
Of course, yes. St. Appleton Bosaletse saying, why are we not talking about cooperatives which can access grants from small businesses? The other thing, cooperatives are the only businesses that can address our youth unemployment. SMMEs are very individualistic and cannot address our challenge en masse. South Africa's challenges are unique and they will require homegrown solutions. Thank you for that very interesting conversation and topic about cooperatives, and something that we would definitely consider for future sessions as well, Mr. or Miss Bosa, let's say. Then from Arlene Fester, from my previous funding experience, I wholeheartedly agree that transparency is crucial, not only before receiving funding, but also throughout the process. We often only do this after. It's essential to maintain clear separation between funding income and the company's regular income. We have found having separate accounts for each is not only a best practice, but it is also important for compliance, especially when it comes to managing things like tax obligations with SARS. This ensures there's no confusion and muddying between the actual income your company has got from customers or potential issues down the line, and everything remains clear, accountable, and accurate with your income. Thank you very much for sharing that insight. I don't think it could be said better. A lot of thank yous coming through. PO funding becomes sometimes a bit tricky because some of these funders want you to be credit worthy, even though you might have a PO. One thing I have not heard you mention here is the need to remain credit worthy as an individual so that you can be credible to the lenders. In other words, you are being funded for your business. Very, very important insight there from Vincent Zokufa. Thank you for that. I'm going to jump across to who is next in line here. Let's see. In our Q&A, an anonymous is asking, is it advisable to always have money in the bank before you submit your bank statements? To our guests, if any of you can answer this one, is it advisable to always have money in the bank before you submit your bank statements? I guess the answer here also is to ask how much money. Shoroshan, over to you.
So, yeah, I would say it is quite, I think, important not to have a negative bank balance. Like, if your bank balance is sitting at, minus 100,000, I think it's going to raise some red flags, right? Especially if you're asking for like 150,000 rand funding, then it's like, okay. Uh, but I think it is important to have, some money if it is possible. But in some cases, I think when you are going out for funding, it means that, you need the money. So in some cases, having that track record and being able to showcase the fact that it's not always the case where your business doesn't have money. You're actually trying to get it to a stage where it can run efficiently and, money can be coming in and out and, you'll be eventually be on a good balance is good. But I would say it does play a favorable role, definitely.
Devin, your thoughts?
No, I think Jay has said it. Let there not be a negative bank balance, because the minute I give you finance, it might be absorbed by the debt, and then there's less. So especially if the debt is not, it's not going to help. And so for me, let there always be at least a good positive bank balance, but let there be liquidity that is shown in the business. Money comes in, money goes out. Yeah.
Awesome. On to our next one. What about incubators to help startup assistance with business plans? I think this is a great one. Yes, of course. The Innovator Trust, for instance, offers a range of programs to assist ICT Black-owned SMEs within South Africa. And within each of their programs, they provide specific support actually to business plan development, something called the Business Canvas model. Tevin, I think you can speak a little bit about this one before we wrap up to our last question and then wrap up our session together.
Yeah, so incubators plays a very important role, right? All support organizations, whether it's an incubator, accelerator, venture studio,
Yeah.
they are key to de-risk the entrepreneur for investment, and they play that role. So again, choose your incubator, accelerator very carefully. Know exactly what you want from your incubator. Before you choose an incubator or an accelerator to go and to be part of. Because some of them are very bespoke, some of them focus on value chain development, some of them provides once-off interventions. So choose your incubator, and I think Wade has spoken about the Innovator Trust and their incubation programs, which is very holistic in its approach and its structure. Yeah.
Awesome. Thank you so much for that, Tevin. There's one question which is quite specific, and I think, Patsy, if we're not able to assist you in answering this question now, we can definitely do so afterwards offline. But this specific SME finds themselves in a little bit of hot water, needing to pay SARS quite a significant amount after their latest submissions. They obviously have to achieve their VAT good standing. How best should they go about resolving this issue? Is there any funding support that they can access in the market for SMEs who may be in this kind of pickle situation?
Not that I'm aware of. It's normally a question of trying to get you out of the situation that you are in, right? It's like I always say, it's like you might have made a mistake somewhere along the line. We have a conversation with your auditors, the guys that were dealing with your books. We try and figure out what is the challenge, and we go to SARS, have a conversation with SARS. There's one thing that I think entrepreneurs are not aware of. SARS is not they're not a monster, right? I've learned through our accountants that we work with all our entrepreneurs, that we rather have conversations with SARS and we try and resolve the matters. We look at payment, structuring, and so forth and so forth. So there is ways of getting out of it, but I'm not aware of any instrument that can help you to pay off the SARS debt. No, I'm not aware of such an instrument currently in the market.
Thank
I
you
might
so much for that answer. I think, again, coming back to the transparency aspect, it always is the key thing. I think SARS is more than willing to engage with SMEs. They understand the SME conundrum and the challenges facing SMMEs. However, SARS and your tax bill is one from a business perspective that you simply cannot get away from. Patsy, I hope that helps you a little bit in solving your issue over there. Then to Charoshan, as a final question, as a Vodacom SMME, please advise how we go about getting or accessing or applying for funding that is available. What are the requirements? Perhaps, Charoshan, you can share with us a link that we can share in the chats for all of our participants to go and visit and find out more information about that.
100%. So I think with Vodacom, there are two typical funding options available. The first one is our business term advance. So business term advance is basically a short-term loan facility where you can qualify for up to 5 million rand. So what I would suggest is, typically, if you just Google Vodacom business term advance, it typically comes up. But what I'll do is, while I am chatting to you guys and just answering the rest of the question, I will go onto the website and just paste the link quickly. But yeah, business term advance is one of the very popular ones that we actually make use of. And I mean, I remember from, I think, the beginning of our financial year, which was April, the 1st of April till now, we did close to about 30,000 loans on that.
Sure.
Application. No, loans. We proceeded with loans.
Sure.
Yeah. So there was more applications, but those are the ones that were actually approved, and that's just from small business. When I say small businesses, those are from micro businesses alone.
Yes.
So not even a
Yes.
small and a medium business. And the second thing that we have is our business cash advance. Now, business cash advance is something that is associated with your point of sale. So where you make use of the point of sale, so there's 3 different types of point of sales you can use. Tap and pay, which is basically available on the app stores, which is the Vodacom tap and pay option, which means you don't need a device. You basically just make use of your phone. So that's the first option. You then have a quicker device, which is one of the more affordable point of sales, and the third one is a max device, which allows you to do some form of inventory management and so forth. Now, when you make use of this for this period of between 3 to 6 months, you'll gain access to up to that 1.5 million rand worth of funding. So it's something that is easily accessible. And the typical documents that you are asked for, things like your bank account details, your business registration, and so forth. So it is quite easy to get these or to apply for these loans. And I mean, the uptake has been really good. And I would actually say that you should definitely try, if you're looking for funding, to reach out to the Vodacom Financial Services team through the link that I've just posted now.
Thank you so much, Jeroshan. Thank you to Tevin. It has been an absolute pleasure to engage with both of you on this session. Guys, if you haven't noticed, on the screen right now is a short checklist in terms of the key funding areas that you need to check across your business before you are applying for a variety of the types of funding options that we have mentioned today. To our guests, once again, thank you, thank you, thank you. I don't think we could have paid better money in terms of buying this kind of information anywhere else, and yet you guys are here offering so freely of your knowledge, of your expertise. So thank you, thank you, thank you for affording your time and your expertise to all of the SMMEs in the room. To each of you who have logged on today, thank you. Thank you for supporting each other as peers in the SMME industry. Thank you for taking a step closer towards your own growth journey. I believe that each and every person has, if not left with a chunk of knowledge, at least taken one nugget that you can use in your journey moving forward. Please do take a screenshot of the checklist that is on the screen right now. As mentioned, this conversation will be available on our YouTube channel, which is Innovator Trust on YouTube. Please subscribe so you can see for any of those updates. As we are leaving, I just want to let you guys know that we are hosting another webinar session on the 28th of this month. That's in 2 to 3 weeks' time at the end of the month. Please do head over to any of our social media platforms to get the link to register for that one, where we are covering access to business acumen. This looks at all sort of other assets or areas in the business, and we'll have some experts joining us there as well. Before you guys log off, please do check in the polls for one last time. We'd like to know, would you like us to continue this conversation in a follow-up conversation? Do we need to have a second access to finance or funding webinar, or are you covered? Do you feel like you've learned sufficiently from this session? Most of you saying, I think it's a resounding yes, please, this was really valuable. So please do answer our poll over there, guys. I'm going to give it a few more seconds before I move on to the next one. But once again, thank you to Tevin and Jeroshan. I'm going to give you guys an opportunity as people are answering to give any last closing words as we ended the session today.
From my side, Wade, I think Petty has a real challenge. Maybe we can do something, but like you said, maybe offline we can try and see how to support and link it to maybe an accountant that can just provide that
support to her.
I think
Patsy, if you could please engage with us, the Innovator Trust, through any of our platforms. Alternatively, please pop us an email at info@innovatortrust.co.za, and we can see how we can support you in that respect. Guys, if you are interested in applying to any of the Innovator Trust incubation programs, please do visit our website. It's www.innovatortrust.co.za. You can find all the information about the various programs that are available. You can register your details, and as soon as the recruitment window does open up again, you'll be able to apply. Please do answer our last poll for the day. We'd like to see from the agencies mentioned, as some of our guests have even alluded to, who you'd like to most see on a webinar, Conversations to Innovate webinar from the Innovator Trust in the future. So if you can please give us a thumbs up over there. And then, Jeroshan, last final words from your side before we close today?
No, I think I just want to thank the crowd and thank you all for being so attentive and engaging. It's been a pleasure speaking to everyone. I look forward to engaging with you guys again, either on the Innovator Trust platform or on the Fast Forward series. Please look out for it. And where we can help, please reach out to us and let's see if we can put you in contact with the right people. I mean, we are available on the likes of LinkedIn, and we can definitely try to assist where possible. So looking forward to assisting the SMEs on this call by enabling them through our so-called votosphere. So thanks, everyone.
Awesome. Thank you so much to Jeroshan, and once more to you, Tevin, for your time and expertise. It's been invaluable. We wish you guys a great day further, and to everybody who's logged onto this Conversations to Innovate Access to Finance webinar, proudly brought to you by the Innovator Trust. Thank you, and have a wonderful day further. Goodbye.